Welcome, everyone, to another week of the None of Our Businesses YouTube show and podcast, where we talk about current events in business from an accountant's perspective. Not just one accountant, but three accountants here, as always. With me is AJ Wheeler.
How's it going?
And Charlie Zigman.
Hey, everybody.
Well, guys, it's another week, another round of news. Let's get into it. What do we have?
Charlie, I went first last week, so you.
All right, yeah,
that's all you, buddy. It's all you.
All right, so I've got an article in The Atlantic called "The Underemployment Crisis." Now, if you weren't already afraid enough about unemployment, here's something new to be afraid about. Basically what they're saying in this article is that unemployment is at 18 million, and that's really scary. But there's another group that they call underemployed, which are people who are maybe have half-time jobs and want to have full-time work, but aren't able to get it, either due to it not being available or due to them not being able to afford it because they can't afford childcare. And so it's basically finding that because of a bunch of factors, including coronavirus and including the rise of the gig economy, where people are doing things like Uber and Lyft and those sorts of things, they're just finding that people aren't getting the type of work that they want to get. And so I guess I want to get your guys' take on whether or not you feel like that is a real problem today, or what you think we could do to, get those people back to full employment.
I think it makes sense just from the standpoint of if people were working retail or restaurants or things like that, that the amount of service that those facilities can provide right now is still limited. Even though they're opening up, they have to social distance, and so it just kind of makes logical sense that there's just fewer shifts for them to operate. But I think beyond that, I think a lot of businesses, when the economy is going well and things are going good, a lot of businesses overstaff. And so it kind of creates this unfortunate effect of when things start going bad, or when things become, when people start becoming cautious, businesses becomes cautious. You not only have businesses that legitimately don't need as many staff as they needed before, but you have businesses that are just right sizing, that just aren't wasting money on overstaffing where they would have been more willing to do that before. And wasting is maybe not the right even way to say it, because I'll admit that in my own business, I've done that. I mean, as of this time last year, I would say we were overstaffed as a team because I was bullish on growth, and we needed staff in order to grow the business. And I think it's just reasonable as you enter the uncertainties of being in a global pandemic that you don't necessarily overstaff. It's not a matter of having less work than you did before. It's just you're not overstaffing because you're just not as bullish. So I think there is, I guess what I'm getting at is, there is kind of a correction that's happening, because in a good economy, or an economy that's perceived to be good, I think there's a lot of overstaffing and that goes on. And a lot of that's probably getting corrected, which is probably part of what we see in some of these numbers.
I have to say, when I looked at the article, it made me think of I think there needs to be a reset on how unemployment is reported, because the employment number, or the unemployment number that you hear on the news, are only those that filed for unemployment or are currently not working. And it doesn't include, like the article points out, those people that are underemployed or have stopped looking for work because there's nothing out there for them. And so when you hear the number on TV, everybody's like, oh, well, this isn't so bad. There's only 3% or something like that out of work. When realistically, that number could vary drastically just because of what they're measuring and how they're quantifying that. So I think probably there needs to be like a reset on how that unemployment number is kind of reported, I think, and maybe give a more holistic view of where the economy's at and where workers are at would be a nice change, I think. So people had an accurate idea of the unemployment numbers out there. But I have to agree with Ty in that I think before this, if the economy was rolling around pretty well from 2008, and people were staffing up and were probably bullish on growth, and now they're probably scaling back. And especially with the advent of, within the last 5 to 10 years, we've seen the advent of Uber and, Uber Eats and all these delivery taxi type services where they're employing a lot of people, but essentially they're working as much as they want, but then they're working around people's peak time for those kind of things. And so realistically, you can work as much as you want, but then there's only as much work as there is demand. And if people aren't moving around or ordering food at certain times of the day, you're only able to work, from say lunch and dinner hours if you're delivering food, and commuting hours for the most part when you're doing an Uber service. So is that really like a full-time job for somebody in that position if they were trying to use that gig economy as like a full-time work gig? And I think it really depends on kind of like your, I don't want to say economic status, but kind of where you are professionally. Those lower tier jobs that most of us saw as like a summer job working at a restaurant or something, if that's your main source of income or your main career field, you're going to go through these ups and downs through at the economic swings. And especially in a situation like now, you're going to see your hours probably cut because of service cuts, and you're just not making as much off of tips and hourly wage.
Yeah, totally. I think the other thing too is that there's a group of people who, if they had a full-time job, they would just work 40 hours. But when they tell themselves they're going to drive Uber instead, they often maybe just don't find themselves having the motivation to do it because there isn't that expectation of like, you're going to work a 40-hour week when you work for Uber. And so I think it's like something people tell themselves and then maybe in practice doesn't turn out the way they had envisioned it when they signed on to it.
All right, our next article is actually from Accounting Web, and this is revisiting the meaning of org culture in an era of COVID. So the tagline to this is, can you remember a discussion in which everyone at your firm agreed to a shared definition of the meaning of organizational culture up front? And probably the answer to that question is no. And so he kind of lays out what he sees as you working through your shared culture or your organizational culture through these kind of bullet points that he has. So a shared definition, you're supposed to kind of have everybody sign off on a shared definition of what the vision needs to be. Then he goes on to very generically have that vision. We'll start with a vision of what you want as a firm culture, and then shared meanings and beliefs, group norms, kind of getting everybody together on stuff that are easy wins that they can kind of check off as what they're showing. Time is one thing he talks about. This doesn't happen overnight. And if you're seeming a bit overwhelmed with trying to create like a vision, mission, and culture for a company or change a vision, mission, and culture for a company, it can take a lot of time. His final thoughts I thought were interesting. And so he's really gearing this article towards COVID. But as people adjust to the new realities, more or not, the ingrained culture from which they emerge will do more to determine how people adapt than anything else. And the ways used to get done will dictate how they get done moving forward, albeit under new constraints. And so I'd like to get your guys' take. I'm sure you've all been through kind of this vision and culture kind of thing at a few of your jobs. And I'd like to get, first of all, if you guys think that that's a worthwhile task, or if you think culture is just kind of ingrained in the upper management of a company, if it's even worth talking about if that's not established. And then I'd kind of get your guys' take on his kind of bullet points here to ingrain a culture, to move a culture forward in a business.
I think it's right on in that culture does matter and that there definitely is one and that it comes from the top down. In places that I've worked that I've tried to do a project built around culture, it was always, I always thought about culture a little bit differently than how they thought about it in that project. So I always thought about it as, what is it like when you're there, right? What is the kind of environment and how do people interact and that sort of a thing. But and it started out that way. They did an interview with everyone in the company and just talked about what they think culture means to them and what about this company's culture attracted them to it and that sort of a thing. And what it ended up being was a big analysis into how this company makes decisions. And so I think that I didn't foresee that when that project started, but it's like your culture drives how you take feedback from people in the company and who's making the decisions. And so it turned into kind of more of an organizational or an operational thing than I had originally thought. But yeah, I think it definitely matters, and I think that it's what you create. Your culture is what the ownership team, the environment that they set up for everyone to operate in. And so, yeah, you just can't get away from that.
Yeah, I mean, I agree 100% with that. I think culture matters, but I also think that our tools on changing culture after the fact are fairly limited. And so, I mean, I think kind of, what Charlie was getting at, that, it starts at the top. I think its culture is set by every hiring decision that you make. And so I think that if you want to have a strong culture, and you kind of know how you want to operate and you want to have a strong culture, then exercising that and making it as transparent as possible during the hiring process, so that there's some amount of self-selection, so that people who are coming to see your company and decide whether they want to join that team or not have the ability at some level, it'll never be perfect, but they can at least make an assessment of what's this culture like, and is it somewhere that I feel like I would fit in and that I would want to be part of. And I think similarly, when you're assessing candidates, kind of making those judgments at the same time, because I think to just kind of hire a random group of people, and random's the wrong word, but to hire a group of people maybe based solely on technical skill sets, and then wake up at one point in the organizational lifespan and say, hey everyone, we want to have a certain culture, and let's work towards having this culture. And I think a lot of companies try doing that, and I don't think I believe in that. I don't see how that to me doesn't feel like a practical exercise. And again, it's like culture is really important, but you've kind of already messed it up at that point. And so I'm sure a lot of cultural change facilitators and experts out there would take exception with my viewpoint on this. But yeah, I mean, I think that your primary, I would double down on, I think your primary place at which you affect culture is in the hiring process. And then the kind of the process that occurs after you hire somebody, the onboarding process, and then the process that both you and a new person kind of go through to decide if that company is even a right fit for them to stay. I think it's that point in time that culture, you have the most effective impact on culture. And I mean, let's face it, I think that we talk about culture. I think one of the things that is weird about culture to me is the way we talk about it in business, because we talk about it as if what each company wants as a culture is really unique, but it's not really, right? I mean, when you look at like the vision statements and the cultural attributes that most companies want, it's like, we want a culture where everyone works hard and everyone, does their best and is inclusive and has diversity. And I mean, you name the punch list, we all know what goes on that list, right? And so, if you were to compare all these cultural statements across these companies, you would think that every company is exactly the same at that point, which is definitely not the case. And so I think that I think that culture is something that we know about in business research and in observing businesses. We know about it from observation, and we know how important it can be from observation. We know how much of a driver to success it can be from observation. We know how cool it can be from observation in some cases. We know those unique case studies where the culture actually is unique. But I think it's still unwritten as to how you actually create a culture, aside from, going back to what I said before, aside from just recruiting, hiring, and attracting people to your company that have those cultural attributes, or have the same values that you're looking for in a company culture.
I think often, people that work in a business or even people that are thinking about culture in a business usually look at it like this untangible thing that we're going to do these steps to create a culture of, and like you said, you can go down the punch list of things we've seen in business that have, their aspirations, I guess, for lack of a better word, of how they would like their culture to be. But realistically, culture is how you deal day to day, hour by hour, decision by decision, and how those things play through. And I think that's why it's so difficult to change the culture in a business that's already up and running. You often hear about these great cultures in small startups, and I think the reason being is the person that started it, or the core group and small group that started the company, has ingrained a culture in the company. To switch midstream when you've already have a culture of doing things a certain way is very difficult, because change is difficult. And I think, you really have to have that top down. And I think it's much easier to have those cultural aspects that every business strives through when you have a small team. The larger you get, the more difficult it is to have those, have a culture that's cool to work for and diverse, and all those things, that the punch list items that we talked about. It's much more difficult when you have a large organization, and you kind of have to fall into that HR rule of treating everybody the same, when in fact what defines like a great culture in a sports team or something like that is treating people individually on an individual level, where some people need to get yelled at, some people need pats on the back every time they do something good. It's kind of coaching up somebody takes different steps, and how culturally you address that stuff, I think, is very different from person to person. And then depending on the size of your business, you can't, a business with 10,000 employees, I'm sure, like Amazon, for example, Charlie, you'll love this one. Amazon probably had a pretty cool culture when they were one building downtown Seattle, starting out selling books. Everybody had a door for a desk. But now you're talking about a company that has worldwide fulfillment and sells everything under the sun on the web. If the company culture is anything remotely like it was in the beginning, it's only because they strive to keep it that way over the years during the massive change they had. But I would venture to say it's probably not the same company culture you had in 1989.
I just want to say that's completely true, and I agree with that. It's like, when the company that I worked at tried to implement this, one of their answers to kind of that scale problem of how do we install this culture at the individual level was that, well, we're going to take on this tool that allows people, that we're going to survey people, and then people can see the results. And so there's this website called Lumio, and it tries to take the idea of not just culture, but other things, but like team decision making, and make it so that everyone can get involved. But there's like an interesting thing that happens where that you can't really forge culture through a website and a web form. And so, like you're saying, it's a attempt to make it scalable, but is not a substitute for all these other things that we're talking about that are what actually drives it.
I mean, I just think about the word culture and the way we use it in business, and the idea of creating culture. Like when you use culture in the greater civilization meaning of it, the idea that you are creating culture in real time just sounds ridiculous, right? Like the Roman culture was not created in the, 10 to 30 years of a startup company or whatever, right? So it just doesn't, and so then it's like, okay, well, I guess that analogy is silly, Ty, because when we say culture in business, we mean something different. Well, do we? I mean, I think that's the thing. And so, yeah, I think I would double down on my feeling about this, not being an expert, but my feeling is that the idea of creating culture is actually kind of silly. You don't create culture. It is. Culture is you have culture. You don't create it. And, you only create it in as much as you're building kind of a new organization, bringing people together. You're bringing people with cultural attributes that are like kind, and it or that have different cultural attributes that build up whatever that culture is of the company. But you're not like causing people to have dramatically different behaviors or values or views or ways of doing things in the small time span of your company and your company's effect on them. So I just, I think that the time horizon involved and the idea that the business is actually creating culture is kind of a little bit arrogant. It's like that's not really likely to be the case. And so I guess that's my view. You don't create culture, you just have it. And if you kind of do it right, maybe you land on a culture that is a good one. But the idea that you're going to create it after the fact doesn't ring true to me.
And I would say even companies, even large companies, probably have micro cultures or, like team culture kind of, the company as a whole may have some kind of culture that they instill. And I've heard from colleagues that have worked at Big Four that hated it and worked at Big Four that, loved it. And I think all of it was due to their who was in their like immediate team, right? If you had a really cool supervisor that taught you a lot and brought you along, or any of those things that make a great boss, versus somebody that got yelled at every time they made a mistake and was, had a box of tissues next to their desk because, as a staff, they just screwed everything up or whatever. So I think you can have a micro culture within of a larger group that would be beneficial, even though probably like at a macro level, it's not as cool, or other people have different, experiences in that same culture. So.
Yeah, 100%. And I totally, and the way you framed it helps me understand kind of culture in a business setting too, because it's like, okay, if what we mean is how people interact with each other and whether we like the people that we're working with and that kind of thing. Yeah, I mean, that's great. That's what it means. But I still think it's a matter of hiring the right people. It's like, who runs that team? You have to hire, it's that person's values that's running that team, and then the people who are joining that team, their values and the way all of them do things that cause that culture. I'm trying to avoid the word create because I don't think they're creating it. I think it just is because of who they are as people. And so the only creation activity, if any, is the choice to hire those people with those values in the first place.
And too often, especially in our industry, I think people are hired off of attributes or, bullet points on a resume or something, what experience they have, as opposed to the interpersonal skills or management style or any of those things that would bolster, quote unquote, the culture.
Well, I think that is the real challenge there, right? Is that the paradox on that is that while I'm claiming that you can't create culture after the fact, it depends on hiring people who have the attributes that will cause you to have a certain culture. Then if you ask the question, well, how do you do that? How do you determine that somebody is, I think that's very difficult. I don't think there is a good formula for that. I think that the reality is that it takes a while of interacting with somebody to really know, because particularly in the job situation, when people first interact with you and they're looking for a job, they pretend to be people they aren't. And so you don't, on both sides, the company pretends to be something they're not in a lot of ways. And the candidate, the employment candidate, pretends often to be somebody they're not. And so no party is getting an actual read of what these people are actually like to interact with until much later in the relationship. So I think that is the paradox, that while the only point in time that I feel you really have a way of affecting culture is at the hiring point, how you actually do that is a big question mark.
So you can't change the way people are, but you can just change which people are involved at all by hiring only the people who are in that right culture.
Yeah, that's my very cynical explanation of it. Yes, exactly.
I think that sounds right, and it makes sense with the entire team set, because it's like whoever's in that team is what's going to drive that culture. And so, I think we'll see a lot of that change as companies are rehiring now after doing all these like coronavirus layoffs, and then having new waves of people come in. We'll find that different cultures kind of emerge from that shuffle that's happening there.
Small businesses absolutely have an advantage on this, and particularly like in our situation, small businesses that are working in a particular industry where you have the opportunity to know people for years before they come into your company. So, I mean, that's when I think about it, that's, Charlie and AJ, you two didn't know each other, but you both knew me for years before we started working together like this. That's a huge advantage and not something that would happen necessarily in a large company. You wouldn't have the opportunity as the hiring manager to know all the people you're going to hire for years before you hire them. But in a small business, it's like, and because we're in an industry, it's like, yeah, I mean, I can bring on colleagues that we actually know or that we know of or that our friends know or whatever. And that, I think that there is, thinking about how you resolve that question mark in the micro business environment, like where we operate, there is a way.
No, that makes total sense. And I've got an article that goes the exact opposite direction. So I'm going to use this as a segue. And there's an article in accountingtoday.com called How Big Data Can Help Businesses Achieve Compliance in 2021. And so it's kind of the opposite of what you're saying. Rather than a 10-year look into somebody that you've worked with, it's trying to figure out how can we make business decisions really quickly with whatever information is available by using an entirely different, what they call big data approach, which is one of those buzzwords that goes around a lot, and I'm not sure has the meaning that the author wants it to have. But for me, what it means is trying to use the business information that is available to you to make decisions in kind of a systematic way. And so what this article's kind of stance is that big companies who use what they call big data can leverage it to see an 8 to 10% reduction in overall costs, which I just kind of love because it's such a huge claim that it's hard to see the connection with. But they tried to give some examples of the ways that business use big data to save money. And so some of their examples were cross-checking expense reports with submitted receipts, making decisions on budgets, predicting fraud risk, and leveraging deals with flights and hotels. They make the point that accounting and finance is very document and data heavy. And so I guess I want to get you guys' take on whether or not whenever I think about something like this, there's always a battle between what I think is theoretically right and what I think is practical to use in a business. And so I guess I want to get your take on how much of what this article refers to as big data is actually practical for a small business to use. Should they be trying to develop these type of systems for monitoring their accounting information, like apps to where people upload receipts and that sort of a thing?
Well, I'm glad you said, like, you questioned the connection of and you kind of said what they call big data, right? Because I was thinking the same thing when I read the article. I'm like, I don't understand, their use of the term big data in this context. And I do think it's a buzzword, and it's like we've talked about this kind of thing before, where in accounting and in our industry, people use these buzzwords to, you can throw that in there. It like now goes in with the other buzzwords we've talked about before, going to the cloud, which I think they talked about that in this article as well. So we put in the cloud, AI, advisory, and less compliance, value billing. Oh, and let's throw big data in there now to boot, right? And I think that's it. Is like the discussion that they had actually, I think, is perfectly agreeable. I just don't think it's actually all that related to big data. I mean, they talk about processing. Really what they were saying is a business can benefit from analyzing its data. There's no big data. There's nothing big about that data. It's just a company can benefit from analyzing its data. Oh, and by the way, there's apps with a certain amount of AI, like expense reporting apps. Yes, expense reporting apps for years now, this isn't new, have had modest amounts of AI in there that will allow you to set rules and identify people who are breaking the rules and do all that kind of stuff. So I think all of that topic is good. I just don't think that's actually what big data means. And I think that, and I have a particular thing about this in terms of big data, is because I thought about, particularly in the education world, like in universities, have this big push. I taught for years at Portland State University, and it's not just there; it's just across the board. There's this push to like integrate big data into business curriculums and stuff, and I think that's fine. But the push comes from this idea that everybody's going to be dealing in big data. I actually think, as a practical matter, small businesses don't deal in big data. in order for a small business to benefit from big data, they have to have a big data set, which would not be their own accounting data, because by definition, they're a small business, so they don't have a big data set. So the idea of processing expenses or expense reports in your small business is a big data set where you apply big data kind of science to it is like ridiculous. It's like it's nonsense, right? In order for a small business to actually have any kind of usage of big data, we would have to be talking about them using industry data or market data, which I think is a cool thing. Like if what they were saying is, for example, on the expense or expense reporting side, if they were saying that there's apps out there that are aggregating the expenses and the expense policies and the expense reporting methodologies and behaviors across small businesses across the country to identify behavioral patterns and potential frauds, that's a big data application, right? But that's not what they were talking about, And so I just anyway, yeah. So yeah, I just wanted to kind of shit on the article in that way. But otherwise, I mean, if you took big data as a word out of the article, it was a good article. The rest of the advice and what they were saying all made sense, and I think was good advice for small businesses. I just don't think it had really much to do with big data.
So
sorry, go ahead, Charlie.
I was going to say, are you saying that if I notice an employee used his card on a Sunday, that I'm not using big data? Is that what you're saying to me?
That's right. Yes.
Yeah. And that's exactly what I was going to point out. All their suggestions were something I thought, well, that's what a good accountant would do. Look at the expense report and compare it to the receipts, or like, wow, this guy's handed in, $1,000 receipts and everybody else, or, $1,000 expense reimbursements every month and everybody else is handing in $100 one, and like, why is this guy's expense report more? I should go look into that. Well, that's something you should be doing as your accounting close anyway, is looking at expenses month to month and looking to make sure that, somebody entering AP or an expense reimbursement should be checking, do the receipts match up to the amount he's telling me? It seems
and the process to do that and the technology to do that has been around for a long time, right? Big data, what's new about big data is that we haven't had the processing capacity, the technological capacity to deal with really large data sets until recent years, right? And so that allows us to do certain kinds of analysis that we were just not able to do before. But a single small business analyzing their expenses is something we've done for a long time. That's not a new thing, and cool. An app doing it may be something relatively new, but that's called AI. That's not called big data. And so, yeah, I think, yeah, it's just, I think, yeah, misinforming the business community about what big data actually is and isn't, and getting everybody all excited about big data when it may be meaningless to their circumstance is just annoying. I guess I just see it as annoying as, oh, you should get involved in big data. Why? It has its place, but its place isn't everywhere. It depends on how you would use it. And yeah, I think it's like trying to use statistical analysis when you don't have a big enough data set as well. That's the other thing, not in this article, but I was dealing the other day with a company where we were talking about sales pipeline, and that, a thought came up of, well, should we use should we measure kind of an average number of sales pipeline prospects that close, or what's the percentage of the dollar value of our sales pipeline that eventually closes, and come up with some kind of statistic like that to try to predict the future. Well, I think if you've got thousands and thousands and thousands of prospects in a year, then that kind of statistical measuring and usage for predictability makes sense, right? But if you have like 30 prospects in a year, and each prospect is high value, seems like you would probably judge your pipeline more subjectively on each prospect. So, I mean, that's just kind of I don't know if you guys in our audience will relate to that point, but that, to me, it's kind of a similar thing to this thing of understanding scope of data, right? When, big data is not the answer to everything if you don't have enough scale. You have to understand the scope of your problem to know whether big data is something that would actually be helpful.
And I'd actually put the scope kind of argument into it. You can look at the scope of what your problem is. And I don't think necessarily that AI or like an expense reimbursement program is necessary for most small businesses if they don't have the volume of expense reimbursement that requires it.
Right.
You're paying a bunch of money for an AI-powered expense reimbursement program if you have 5 employees that submit $100 worth of reimbursement every month. Is it really worth the expense and time?
I think to that point is when we talk automation and AI is remembering that it's not costless in terms of time and money, even if the consumer cost of off the shelf, out of the box automation with kind of consumer grade software may seem very low cost. There's setup time, there's learning time, all that, right? So I think you always have to do that, exactly what you said, that judgment of, is our investment in implementing this automation actually worth it? Do we have enough to automate that makes that kind of investment even worth it?
Yeah, and just looking at brass tacks on process, I think sometimes can get you around buying an expensive program if it's not going to fix a broken process, I guess is what I'm saying, if you just plug an expensive piece of software in.
I want to circle back because as we've agreed, the article didn't handle big data in a very sophisticated way. And so I just want to reiterate something, which is, I'm not saying that a small business could never benefit from big data. The trick is figuring out, and I haven't done this. I haven't been smart enough to figure this out yet. But the trick is figuring out how a small business accesses the big data sets to do the analysis and automation and AI on in a way that's helpful to them. And I mentioned earlier, my intuition, I may be wrong there. There's probably, I'm not imaginative enough. There's a lot of other ways to get a large data set that can provide some meaning to you as a small business. But I was mentioning, going to the industry level, the market level, or whatever, as very kind of naive or kind of low-hanging fruit as possibilities. But I think that's it, is to be clear with our audience, is that with some imagination and some more hard work, I think that's possible that small businesses can benefit from big data analysis in the future, but there has to be a connection to a big data set. It's not obvious to me exactly how that works yet.
Totally agree. So continuing on big data, I have a article here from American Banker, and the title of the article is Why Banks Are Putting PPP Forgiveness on the Back Burner. And so Payroll Protection Program Forgiveness Portal has debuted, but leaving banks and their borrowers with a big decision. And so a number of banks, including JP Morgan Chase, which the article quotes here, is that they're holding off on processing applications for forgiveness. Now, I thought it was kind of funny. JP Morgan is backing a push for automatic forgiveness, and they say, quote, as it would help thousands of small business owners get back on their feet by having an automatic forgiveness program or an automatic forgiveness application, I guess, for when you're applying. And so I thought it was kind of funny because I think the real reason why JP Morgan Chase is saying that, wink, wink, is so that they don't have to have a bunch of their bankers do a bunch of work to try and get the loans forgiven. I think they just want to push it through. But additionally, they said that there's no more loans going on after this past Saturday, and lenders are kind of in a gray area as to whether or not they should switch on their application process. And everybody's basically waiting not to be the first to do this. So I'd kind of like to get your guys' take on whether or not it's a good prospect, because I do know a bunch of businesses that are kind of chomping at the bit to get this answer on how much is going to be forgiven. And if you guys have any personal opinions on whether or not the floodgates should be open for the forgiveness applications to go through or not.
Well, I think in the article they cited that JP Morgan or Chase anyway, that they were saying, well, they're advocating on behalf of all the small businesses that there's just this kind of flat out forgiveness kind of thing, at least under certain thresholds. and that's why they're not opening their portals yet or whatever. I think from my perspective, it's probably what the case is that the banks have to make a big investment in programming these portals and doing what they're do and to set up their side of it. And basically what they're saying is, well, why should we make this investment if the Treasury or SBA is just going to come back out, or somebody's going to come back out and say, we'll just forgive them all under a certain threshold? Then they would have wasted that investment. So I think that's what it's about, is that they're just sitting on the fence because there's so much talk in the political circles about, well, can we just, do a blanket forgiveness for some PPP loans that are under a threshold? And I think the signal is, like, if the banks think that is a serious conversation, then they're not going to move forward with making the necessary investments to process applications. And I think that's what we're seeing, which, okay, so that's frustrating perhaps to those companies and non-for-profits and so on that want to kind of get some certainty and process their applications. But I guess the silver lining is that banks, which have the resources to kind of be in the know of what's being talked about in Washington, think that. So maybe that is real. Maybe that is a real possibility here.
Yeah, it does seem convenient how the thing that saves them money is also pitched as an argument of, we just want to help small business because by not making this website that costs us a ton of money. And by the way, a website which I think, I might be wrong in saying this, but Mark Cuban made that. We talked about this on the podcast, but there was that site called PPP Bank. And so I think if I'm Chase, I'm also looking at it as like, well, I want everyone to use my bank, but there's also these free tools that are out already that do this thing we're considering investing money in. So it seems like a not that exciting prospect. So yeah, and it's never anything altruistic. You can't ever have Chase and then altruism in the same sentence. So we can just get that off the table now.
Sure, that's quite cynical, but I have to agree. I don't think Chase is doing it for the small business guy out there. We're trying to look after the small guy's back. They're most definitely making a cost-saving call.
Yeah, well, I mean, they were like one of the last ones to open their PPP application process period, right? So, yeah, this is not surprising that they're also dragging their feet on opening the forgiveness portal.
Well, and then I think also, too, aren't they one of the largest ones that lent the most amount of money? Is that the article I think says? Yeah, the program's biggest participant, 29 billion in PPP or origination. So, yeah, no surprise there.
Yeah, that is silly. All right, so I've got one more article we can talk about. It's called from Forbes, and it's called "The Number One Thing Every Small Business Can Do to Thrive Now." And so it's pretty predictable, it's what everybody's talking about now, but I guess I want to talk to you guys a little bit about it and see what you think. Their take on how every small business can thrive now is to think in a digital first mindset. And so they take that to mean payments primarily. They talk a lot about how to move away from banks to different payment methods and how businesses are moving to contactless payments like card tapping and that kind of a thing. And so, and then it talks about switching to social media for their advertising and everything like that. And I guess my only issue with this is that these are all the things that were good ideas a long time ago, and the pandemic has maybe sped that up, but didn't change what was really the focus for a long time. And so, I guess I want to get you guys' take on, is this really now the time to switch to digital, or was that actually a long time ago and some people maybe just noticed now because of coronavirus?
I would say I agree with you. I think the time to switch to digital payments, digital marketing, digital everything was probably a long time ago. And like we've talked about on this podcast before, I think the pandemic is the great accelerator in all those things. One sector of the economy or one sector of payments that have not come up to a 21st century speed is probably cities and states, or like power companies and utilities. Most are still only accepting, either call up and give them your credit card number or send in a check. And so I think probably where you're seeing is like government type entities or state type entities as being the great lags in this digital payment processing, when probably most small businesses at this point have moved to, or have at least taken a stab at, accepting digital payments and such, and digital marketing. And probably the outliers there are, those old entrenched kind of legacy type payment systems in the states and utilities that are not moving forward with a more digital or 21st century view on how to assess those payments and marketing strategies.
I think that the curbside pickup concept definitely like accelerated and gained a lot of ground during the pandemic. I know like Starbucks, for example, it kind of started doing some of that before the pandemic, and occasionally I would do kind of my mobile app order or whatever, but it wasn't like something I did a lot of. And now it's like that's the only way I do it. Even though you could go in and order, but it's just more convenient since you can't hang out there anyway, right? So you may as well have your order ready when you arrive. And so, but then I think, beyond kind of a big kind of forward thinking chain like Starbucks, they're typically on the forefront of that kind of thing. I think you see everyone doing it. You see a lot. I mean, I wonder like with restaurants, if like the curbside pickup as a percentage of their overall business will just forevermore be a bigger thing than it was in the past. Yeah.
Yeah, I agree completely. Yeah, I don't know that I have much more to add. I'd just say that, it's the way of the world. Everything is changing in that direction, and this just sped it all up. That's what it seems.
Yeah. So speaking of changing kind of environments, I have an article here from CNBC, and I've seen a couple articles come out about this, but this was back on Monday. A judge granted a preliminary injunction requiring Uber and Lyft to stop classifying drivers as contractors. This is in California now. And what they're wanting is, or what they're basically asserting, and the reason why the judge put this preliminary injunction in is because there was a lawsuit filed against Uber and Uber and Lyft, basically decrying employees or contractors as they're known, saying that they're much more like an employee versus a contractor. And so essentially Uber, in a later article I saw, come back and said that if this holds, they're going to suspend their activities in California. So this has a large like kind of trickle down effect here. And so they had both companies said they would appeal the ruling. And so they have quotes here. An Uber spokesman said, the vast majority of drivers want to work independently, and we already made significant changes to our app to ensure that remains the case under California law. When over 3 million Californians are without a job, our elected leaders should be focused on creating work, not trying to shut down an entire industry during an economic depression. So, and Lyft goes on to say that drivers don't want to be employees, full stop. So I want to get from you guys, do you think this is really the sentiment of like Uber and Lyft drivers, that they don't want to be considered an employee? Because I've had this happen to friends where they're driving for Uber or Lyft or Postmates or something like that. They don't realize they're an independent contractor. And when, end of the year comes up, they get a 1099 from these guys. All of a sudden they have, self-employment tax that they have to pay that they weren't aware of because they were just naive to the fact. And I'm wondering if it makes sense that, Uber and Lyft are classifying these guys as contractors, or if you think that they are in fact employees and should be treated as such, with, of course, Lyft and Uber paying the employer side of that tax and providing some kind of amenities to these people. I'd like to get your guys' take.
I think, as self-serving as it sounds for Uber and Lyft to say, oh, the drivers want to be contractors, I think that actually is quite possible, but I mean, the truth is that actually, if you actually talk to all the drivers and were to survey them, I suspect the truth is, I should say, that you get a mixed bag. You get some that are entrepreneurial and they want to be their own businesses, and you get some that want to be employees and want the protection of employment. And, they're forced into being contractors because that's just how the system works. And you can't be an Uber driver and be somebody's employee. And so if they could be an employee, they'd love to. And I think that is kind of, in the workforce, that is kind of one of the great divides, is that kind of when you're working with people, some people are more entrepreneurial and they're not looking for the protections of being an employee. They're looking for the freedom, the risks that go along, understanding the risks that go along with it. They're looking for the freedoms and the opportunities that go along with being your own business. And so this is one of those things, whether it's Uber or any other business, that I think that the states and the Fed across the board overreach in the sense of being too patronizing on this issue in terms of telling the people who are in that workforce that they are employees, like saying, well, we're gonna determine if you are an employee, and whether you want to be or not. If we think that you are like an employee, we're going to say that you are an employee. You're entitled to those workplace protections as if you're an employee. I think that's a very patronizing approach to it. I mean, thinking outside the box, I kind of wish if the world was in a different scenario that we could let the workforce make their own decision as to whether they want to be an employee or whether they want to be a business or a contractor, because that's where this goes, right? You know, what Uber and Lyft is actually saying, which is somewhat correct, is that this is not just a fight about whether Uber and Lyft give some people the opportunity to be employees. If California's position were to prevail and become kind of the way it is across the board and across the country, that would mean that those entrepreneurial Uber drivers that want to be businesses on their own right would not be allowed to, because they basically are being forced by the masses and the government to be employees under that kind of definition. And so, yeah, I mean, I think if you want to be a business, you should be allowed to, right? And if you want the protections of being an employee, there should be the opportunity or something that allows for that as well. I don't think it should necessarily be an all or nothing definition.
See, I think that's interesting because, like, I've always heard kind of the traditional, well, maybe you're saying it should be different than what it is, but, you know, the kind of traditional approach I've always taken to this question of is somebody an employee or a contractor was to kind of just walk my way through there's a form, the SS8, called the Determination of Wage Classification, where it's essentially a test basically saying, is this person providing his own tools? Is this person working under his own terms and conditions? And it tries to clarify this. And so that's why part of this whole thing is so interesting to me, is because that is supposed to know the entire issue of what they agree on. If the form functions well, then the form tells you the answer, and it doesn't matter what you or them should want to agree to. The other thing I'm thinking about is I think the self-employment tax as a big surprise is totally true, and it's a big problem that these people get into. The other one I never hear discussed is just the concept of liability, especially in the idea of an Uber. And there's this whole idea called respondit superior, which is like the Latin for let the master answer. And it's a legal concept about vicarious liability, where it's like saying if a person is an employee and then he's doing things as an agent of that company, then his actions are the actions of the company because he's acting in that moment as an agent of the company. But if somebody is truly an independent contractor and isn't an employee, and then they're out driving Uber and they get into an accident that requires them to, you know, use their insurance or whatnot, it becomes their issue as opposed to becoming Uber's issue. And so if I'm driving Uber, I'm worried about the self-employment tax, but I'm also kind of worried about that issue as well. And I just don't know that it gets as much, I don't know, people don't talk about that as much, I feel. So yeah, I don't know.
Interesting point. It'll be interesting to see what happens, because essentially, you know, as this, you know, even though it's in a California court, I think as California goes, you know, this decision will basically set a precedence for rest of states, or how Uber, you know, conducts business worldwide, essentially.
Yeah, so. I think just a kind of a technical clarification, and also to answer kind of Charlie's question about my position. No, 100%. I am basically saying how I'd like it to be, that people could choose. And so exactly what Charlie said is it's not like that from a federal standpoint. There is this test that you go through, and so from a federal standpoint, the IRS looks at it and says, well, if you kind of meet certain criteria and the preponderance of evidence based on this criteria is that you're an employee, then you should be classified as an employee. And that's part of my point, is that I don't think it should, that is how it is, but I don't think it should be like that. It should be such that, well, if you met those requirements that you could be an employee, but in fact you want to be your own business, there should be room for that, but there isn't. You know, from an IRS standpoint, that's 100% correct, that if you meet that criteria of being an employee instead of an independent contractor, the company has to treat you as an employee. Even if you want to be treated as a contractor, they can't do so. They have to. It's not something that just the two of you can agree on. And this is one of those most common, like, misunderstood things I see in small business all the time. I even hear people refer to the so-called 1099 employee. There is no such thing as the 1099 employee. What they're basically it's this mythology that the company and the employee can get together and decide if they're going to be a contractor who gets a 1099 or if they're going to be an employee. And to exactly what Charlie cited, that's not how it works. It's facts and circumstances. If the facts of how the arrangement is set up will lead you to conclude that they are an employee, then that's what they are. An employee doesn't get a 1099 period. It's not a choice. It's not an election. It's not something that you can choose to be or not be. It is what it is. But the technical clarification that I want to make is that definition of it is what it is actually different theoretically on a state level than it is on a federal level. So that's why this is a California state case, because the states look at this more from the standpoint of the liability insurance and from the standpoint of unemployment insurance, but also disability and things of that nature, right? Like, are they being, and that's why in that case they were talking about employee protections. And so the criteria that different states use for defining an independent contractor versus an employee are very similar to the IRS's criteria, but they don't have to be the same. So California could have a list of criteria where something on that list is on California's list that's not on the federal list for IRS purposes. So the IRS's agenda is, how, is this person paying self-employment tax or not? How does their payroll tax process work? That's what the IRS is on to. Are they able to deduct expenses as if they are a business? That's another issue that the IRS is on to. That's why this independent contractor versus employee question matters to the IRS. But to the state, it matters for a different reason. It matters because of these employee protections, the different kinds of insurances and things that you get when you are an employee. And so while the definitions can overlap, they can also be somewhat different. So a determination that somebody is an independent contractor or an employee in California doesn't technically make that determination for IRS purposes, or vice versa. You could basically conclude that for IRS purposes, this is an independent contractor, and California can still say, nah, they're an employee for our purposes. So that happens, and that's something to be aware of.
Now that's interesting, because I actually did not know that. And I think that makes sense, because each state has their own labor laws, and it's a series of issues that are just state level issues as opposed to federal. So that makes a lot of sense. I had not considered that angle.
All right, our next article is most definitely a federal tax issue. So this comes from Accounting Today, and Trump, headline is, Trump says he's seriously mulling a capital gains tax. And so quote from Trump is, we're looking at also considering a capital gains tax, which would create a lot more jobs and this is through an executive order. And so what I found was interesting was he can't actually, through an executive order, cut the current 20% long-term capital gains rate without Congress. But what he's mulling over, I guess, is revamping capital gains through an executive order would basically put in an inflation kind of offset that would essentially make the capital gains tax lower. And so I thought I'd like to get your guys' take on this because it's something he's considering. We can also wade into the executive order that he made that essentially extends the unemployment for an extra $400 a month too, since Congress couldn't do it. But I'd kind of get like your guys' take on whether or not a capital gains tax would increase jobs, because I'm kind of having a hard time wrapping my head around that. And then kind of the way that they're going about this of, basically an inflation adjustment for capital gains that would bring it down. Yeah, I mean,
wow, there are a lot of different things loaded in those questions, right? But I think it's an interesting technical thing that I didn't know about this idea. I hadn't heard of this idea before. And the article referenced that they actually came up with this or thought about this during the George H.W. Bush presidency as well, and then decided not to go this route. But the idea is that if you own a capital asset, and a capital asset for most people would be like investments in stocks and mutual funds. It's not the only thing it could be, and technically from a tax standpoint, but if you own assets that are considered capital assets for tax purposes, and you think about it this way, if the only reason they increased in value was because of inflation, there was no actual increase in the underlying value. It's just inflation occurred, they held their value, but they have a higher dollar amount due to inflation, then you wouldn't have any capital, you wouldn't have any gain. If you then sold that asset and you sold it for more than you bought it for, you sold some stock or mutual funds for more than you bought them for, but the only reason that price was higher when you sold it was just because of general inflation, then you wouldn't have any gain. That's the concept. It's interesting. I don't know the statutory or technical reason why a president can make that happen through executive order, but can't just cut the capital gains rate. But apparently that's a thing, right? Is that I guess you can just say, well, we're not going to tax gains that are related to inflation can be done by executive order. Okay, if we accept that that's technically true, not knowing it, whether it is or not, but I'll accept that's technically true. Interesting. Okay. But then you get into your next question, which is the great political question, right? Does cutting capital gains in any way through this mechanism or just from a straight cut to capital gains actually benefit the economy? And that is basically the old trickle-down economics debate, right? Does basically increasing the cash flow through lower taxes to the investor class benefit the economy? And people have heard me say it here on the podcast before. I believe in an economic theory that our economy is based on consumers. So benefiting the economy is based on increasing consumers' cash flow, not necessarily investors' cash flow. But heck, I'm not really an economist here. I'm an accountant who just knows a little bit about the economy. But that, I mean, essentially that's the debate that you're digging into there.
I'm with you, Ty. I don't draw that connection. I don't think that it's obvious to me that cutting the capital gains rate would result in a significant amount of jobs increase.
I guess my dime store economic theory is if you're already in the investor class and we give you more money, you're probably going to invest it and not spend it in the consumer economy. I mean, I don't know. You had enough money to invest in the first place. Are you really going to go out and blow it all now because you sold the capital asset and you got to keep a little bit more? I don't know.
I think that is. I think that is what we see. I think that when we saw after the Great Recession that a lot of the breaks and things that went to large companies in the investor class ended up with large amounts of cash sitting on balance sheets is what actually happened. So that's my
to make investments with.
yeah. But that doesn't necessarily stimulate. That doesn't really stimulate the economy.
I mean, it's the same question about why treasury stock buybacks are bad, right? Every time we've talked about why companies using bailout money to then buy back all their treasury stock is an issue. If you believe that, then this is that same issue, or at least in a different light, but same core debate.
Absolutely. I think we treaded well around that one.
Yes.
All right. Thanks for watching the show this week. Make sure if you hit the subscribe button and notification bell. We're here every week. Fridays, we record the show, release it next week. If you agree or disagree with anything we had to say, you leave a comment down below. And for all of us here at None of Our Business, we'll see you next week.
Thanks, everybody.